Dmitri, welcome, man. How are you doing? Blockchain People podcast.
Hi, Carlos. Thanks for bringing me. Great to be here. I'm doing well. How are you doing?
All good here, man. All good. Really happy always to have technical people here. Always happy to get to talk Ethereum at length without people calling me a maxi because I'm interjecting Ethereum talk in non-Ethereum conversations. So
Right.
if you want, let's just talk quickly about who you are, what is StakeWise, and we'll take it from there. I'm sure people will be very, very happy to learn what you guys are doing.
Absolutely. Yeah, so I'm the founder and CTO at StakeWise. Initially, I can start like how I started in crypto. It was around 6 years back when I was doing my master's in cryptography and security. The first time I learned about Bitcoin, and it actually blew my mind, like what you can do. You can transfer like money without any intermediate parties. And later on, I heard about like Ethereum, that you can actually also build decentralized applications on top of the blockchain. So and since then, I was always like following the space, and I was building different applications. Like started with the miners, like building some crypto lotteries on top of miners as well in a decentralized, like with the smart contracts way. And then like 3 years back, I heard about ETH2. That got me really excited. I wanted to become a validator myself. And yeah, this is how the StakeWise actually was born, because in the beginning, you had to have 1,000 Ether to become a Ethereum validator. And that was like a huge amount of money. So the pooling idea came out of it. And I started to follow the ETH2 space. I was like joining the conversations around ETH2 client teams, trying to help out where I can. And at the same time, I was building StakeWise until we launched March this year. And yeah, we're live and we are here. So I can tell you a bit more maybe about what's StakeWise and what's
Yes,
exactly for users. So StakeWise is an ETH2 liquid staking platform where users can stake their Ethereum, get tokens back, and use that in DeFi. So they don't need to care about running the validators. They don't need to care about the amount of ETH they have. You can stake from 1 way up to 1,000 Ether and get the tokens and just use them in a DeFi. We also have a unique token system in a way that we split the reward and the stake, like the principal balance and the reward balance, in 2 different tokens. What it allows us to do is it allows us, like the users, to compound the rewards. That's something which is unique to the whole ETH2 space, and that's something that validators, by their nature, currently don't allow to do. Yeah, and those basically are the points that we solve for the users. This is like infrastructure part. They don't need to run the validators. They can stake any amounts. They can compound their rewards, and they can use their staked Ether across DeFi to earn bigger yields on their ETH.
Dumb question here, but why is it that nobody had thought about compounding the gains from staking before? Why is it that you guys were first movers in this space?
Right. It was more about the token system, what you built. So in general, there are currently 3 types of tokens how you can that are used in the ecosystem for liquid staking protocols. One of them is where you increase so-called rebalancing token. When you get like when you stake 1 Ether, you get 1 like stake token back. And then it increases in the numbers. So you get like like with the time you get 1.1 stake token, 1.2, and while you hold it, you kind of accrue the rewards on top of it. But actually, what happens under the hood, there is like a validator, and the validator, in order to create the validator, you need to have 32 Ether, and you also get the Ether on top of it. So you get like 32.1, 32.2, but the part which brings you more rewards is actually only 32 Ether. It's called effective balance. So if you even have like 35 Ether deposited, like 60 Ether deposited into one validator, you will still earn only from 32 Ether. And most of the projects, they represent it as one single token. Like you have, if you have, let's say, if you stake 34 Ether, not basically stake, but yeah, the rewards and the principal are contained within one token. And because we separate them, like we have everything what is 32 Ether, represents 32 Ether staked as one token, and what it earns on top as another token, it allows people to use secondary markets to actually exchange those rewards into the stake. So there is a liquidity pool where they can like basically sell the rewards for the principal, and this way they increase their principal. So if they stake like some amount, then it becomes like more in principal. So yeah, this is how we enable compounding, and yeah, this is it.
And I mean, just to stay on the line of what StakeWise is and what StakeWise does, it's interesting to me that all of a sudden you see more people staking, right? Before, when staking was just first announced, people would be sort of not completely open to the idea. And now with the ultrasound money meme, with the deflationary thing, with the London upgrade and all that, it seems like more people are coming around to staking. So are there any factors that have influenced how people think of staking besides the obvious?
Yeah, I think
and if you want to state the obvious, of course, it's all right.
Yeah, I think there are like multiple ways, because multiple angles to look on that. So I think like in the beginning, people who started to stake, those were people who like, because when ETH2 staking started, the yield was the highest because there was the smallest amount of Ether staked, and with the more ETH like staked into the ETH2 network, the lower APR becomes. So people rushed into that, and they wanted to get you like basically earn the rewards that they can get from that early launch of ETH2. But now it becomes more like, I think, from people who don't want to just like play on the price of Ether, buy and sell, but actually are long-term believers. They want to stake their Ether for a longer period of time. They believe that Ether gonna like become basically, yeah, will cost more, and yeah, they are the strong believers in Ethereum ecosystem and the blockchain itself. So those are the ones as well. And in general, I think the ETH2 staking as of now, it brings you one of the best yields on top of Ethereum. So if you have multiple options there, you can either participate in like collateral protocols, or you can basically stake Ether, another option, and there are probably more of those. But yeah, staking ETH is one of the highest APRs as of today.
You know what I find very interesting? That we have like these two simultaneous narratives in the world, which is like Ethereum is eventually going to flip Bitcoin. And I think more and more people are just coming around to this idea as something. I'm not going to say that it's a given, but most people are coming around to it as a given. And you even saw like Goldman Sachs comment on that. And on the other hand, you have the crowd that is like, Ethereum is worthless, the fees are too big, you're never going to manage to fix a system that's already running. I don't know. Do you see the other chains that are like, of course, pushing this narrative and the fanboys of those chains that are pushing this narrative? Do you see them as just in denial, or what do you think is happening there, that we have these two things happening at the same time?
Right. Yeah, I think I'm actually really following the Ethereum space more than any other blockchains. Like the reason of
Same.
that is because I'm just a strong believer of Ethereum, and it's more comes from the developer side, because if you want to build something on top of the blockchain, Ethereum gives you the huge variety of tools, like language you can write on Solidity, you can write on Viper. You have like all those also libraries and tools to make a decentralized application. So and I think it's really hard to kind of compete with that for other chains, because you have to, like, Ethereum has so large ecosystem of developers. You have like protocols building on top, L2 solutions, and so many projects out there. So it's hard for other chains to get that somehow. And I see like some of them are building on top of EVM. They are trying to get use of all the tooling around like Ethereum, but at the same time to kind of solve the most of the pain points that currently we have, like high gas cost, like slow transactions, and et cetera, et cetera.
All right. And at the very beginning, you mentioned something very interesting, and that is that, of course, you were, like everyone, I guess, like drawn to the space by Bitcoin and
Right.
the idea of Bitcoin. And eventually you realize that there is way more to it than the monetary part, and you go and build stuff on top of blockchains through smart contracts and, of course, Ethereum. Uh, I didn't follow what happened to these, because it seemed like for a second there was a lot of noise around Taproot about this Bitcoin upgrade that would allow it to have smart contracts and all. The enthusiasm just seemed to fall right out of the face of the earth. What do you think happened there? What do you think? We're not talking more about the possibility of smart contracts in Bitcoin anymore.
Right. Well, I think, yeah, I remember there were some discussions around that, and I haven't seen like how it progressed with the time. But I heard that perception of Bitcoin, it comes more like digital gold, so to say, like the one you kind of hold, you exchange, and that's pretty much. You have the Lightning Network that they build on top to make it like to make the transfers more seamless. But I think it's just it's not, it probably they work on that. I'm actually not really sure following that, whether that's somehow progressing. But I think it's just difficult to compete with what Ethereum already has and what it builds on top of ETH2. So it's probably that Bitcoin just takes this first mover advantage, and the fact that, yeah, there are already like huge amount of, like the largest blockchain as of today, and probably they gonna stay on that level and not bring the like the smart contracts there, or they can change that. It's interesting to see how they are progressing there.
And if you, I don't know, I get a feeling that most people just get the idea that Ethereum 2 is just about cheaper fees. But I don't think people have worked too hard on explaining the rest of that. So what else would you say to people that think Ethereum 2 is just about cheaper fees? And what else should people be looking forward to or getting excited about apart from cheaper fees?
Yeah, I think actually cheaper fees is already like a huge achievement. Like
I mean,
now
yeah.
it's the biggest problem out there. You can't really operate like on like send anything, because it costs you like even more than that you are trying to kind of transfer. But in general, there are multiple things that ETH2 brings there. One of them is, yeah, the scalability. That's something that allows us to get like cheaper fees and have much more transactions going through the network. At the same time, we get rid of proof of work. That's something what is actually very like energy consuming and unfriendly to the environment. And we replace that with proof of stake. That's kind of the new consensus mechanisms that was launched just like with the launch of phase 0 of ETH2, which was December last year. That also brings like more security, decentralization, because currently proof of work is very concentrated around the mining pools. So you have like several mining pools that are close to 51% attack, that are like really can dictate the rules, and basically we make the Ethereum blockchain more secure and decentralized with the move to the proof of stake. And I think there was, so, and at the same time, there are more possibilities that we can do. Like on top of that, there is more in the pipeline to kind of, you can use, of course, like staking. That is something that could be, many people can get use of to secure the blockchain, and at the same time earn passive income on top of Ethereum. And in general, there are it will be much more user friendly and developer friendly to build on top of it. So it's the same Ethereum, but basically with no limits in terms of scalability, in terms of the shards that it will allow us to like have much more transactions transferred in the chain.
It's funny because that is right. You don't see Ethereans trying to pull the environmental argument on other people. In general, the environmental argument is very much something that comes from, it's very one-sided, right? Like people in the attacking front, I would say, I think that's the best way to frame it, because it's just a little tool that people use to like attack the crypto ecosystem. People in the attacking front, they throw things at you, and when the proof of stake initiatives get rolled out, or when there are chains that on our side, on the blockchain community side, that don't have the problems of proof of work, I don't think we're as active going and promoting that they're environmentally friendly against others. Whereas I think that creates a very interesting imbalance, right? Like you would see, not to get political here, but like what you would see with, like, let's say the politically correct movement or whatever, that one side of the movement is very much more active than the other in stating their opinion. What do you make about the other proof of stake chains? Let's say Tesos, Cardano, Solana. Are you interested in particular in any of them?
Well, I started with Ethereum directly, and like looking into other chains. I think what Ethereum brings to the table in the world of proof of stake is the bigger decentralization, because you don't have that concept of delegating your asset to some like validator node. There are like most of the proof of stake blockchains, they have just a set of validators that, like, what they're doing, they're proposing the new blocks, they are voting for the new blocks, and do all the work that miners are currently doing. So there is a limited set of them, and in some cases, like, the decentralization is also measured in terms of how many like how the like validators are concentrated within a certain like geographically, or like in the group of certain people. So there is a point of centralization on other proof of stake blockchains. However, in Ethereum, anyone can become a validator. That's I think a huge advantage, and for that you need, of course, like, if you want to do it by yourself, you need to have 32 Ether. And in case you don't have 32 Ether, you can use like StakeWise to actually also participate in that. So, but at the same time, like there is large amount of validators, and until there is a consensus between those validators, the blockchain is still kind of functioning properly, transactions are getting included, and like we can use all the great DeFi out there that there exist. So yeah, I think what's new, what Ethereum brings to the proof of stake is the bigger decentralization, because there are much more validators that are running on top of that chain to kind of submit the transactions, or submit the new blocks.
And just going back to the environmental thing, because I was just thinking about this, I imagine that if some people start rolling out, let's say Ethereum 2 launches and everything is perfect, right? We have complete proof of stake. I'm sure that if some people start offering environmentally friendly mining, even though it's the same mining as everyone gets, then they'll get a niche, right? Because the blockchain market does fail to capture like these mainstream marketing viewpoints or selling points.
Right.
I'm curious about your thoughts on the fact that many people also wave this argument that proof of stake is just like a tool to make the rich richer and a centralization tool for the foundation.
Well, yeah, the thing is that I would maybe yeah, it's kind of maybe the problem in general, because if you have like the proof of stake in general builds on top of like the asset, like Ethereum, case of Ethereum, if you have like 32 like multiple of 32 ether, then you can run the node. But the thing is that it doesn't scale. So with more Ethereum, you have kind of, if you want to stake more, run more validators, that's more risky. That brings like more problems, because you have to run a separate validator for every 32 ether. So if you're a whale with like thousands of ether on your balance, you would have to split like those thousands of ether of yours into like 32 ether each, and run the validator. So you get like much more.
Sorry to interrupt there, but
yeah.
But can you just touch on the logic on this 32 number before you continue with the rest?
Why it's 32?
Yeah.
Well, there is a theory that Vitalik likes numbers that are multiple of 2. Like if you like have 2 in power of something, that's the good number.
Okay.
But I think there is a security reason to that, and like initially, the idea of validator was to have like 1,000 Ethereum if you want to run a validator, and then it went down to 32. So it's more to the security design why it's 32. I think it brings like more like, yeah, you don't see the ether concentrated within like a certain amount of validators, because if there is more ether in one validator, there is more risk that if it comes down, then there could be some problems with the chain itself.
Okay, and
so
moving forward with the problem at hand there.
Right. Yeah. So basically, with the Ethereum like at stake, if you have like 32 ether, you have to run those validators. So in our case, we already have more than 1,000 validators running on the infrastructure, and this is like a responsibility as a project you need to take. You need to monitor them. You need to maintain them. There is always some problems that can arise when running the validator, because there is quite some amount of risks that are involved when you run the validator in ETH2, as opposite to like any other chains. And yeah, so I think from the point like you said, the richer gets richer in that case, but at the same time, there is more like work the richer person needs to do, because there is like more responsibility. You have to run more validator nodes. You have to spend more time on monitoring them, and at the same time, the rewards don't compound. That's another like thing. They don't compound on the validator side. So if you have like, I don't know, like more than 32, you still earn only from the 32 ether. Only in case you use the StakeWise, where we allow people to kind of swap the rewards into the stake to get like more stake on that side. So yeah, I hope it answers the question.
I mean, in general, every problem that we may have where the rich get richer or the popular get more popular or the whatever, that's just an unfortunate thing of life that no one has ever managed to know how to deal with, right?
Right. Yeah. That's totally true. And the only maybe thing to keep is good to keep is that if you provide more capital, then you kind of take more risk at the same time as well, because like with more ether at stake, you can lose much more as well. If you don't do that properly, there are like different things that could go wrong with running the validators that could make you poor, like, you know, and if you don't do that well. But at the same time, if you, yeah, like it really, it's really for every person when it comes to staking, it's a balance between like the risks and the capital the person wants to commit for that.
And another concern that I'm just touching on all the hater points here, as you can see, like, but because I do spend a bit of time in the Tesos community, I feel like you have to be sort of aware of everything, right? And which is super hard, and it requires a lot of time. But you do see the criticisms boiling up, and when it comes to something as popular as Ethereum, the criticism points tend to concentrate around a couple of them. Do you think? Okay, EIP 1559 was something that got resurfaced, right? It was, and some people don't know this, it was like an old proposal that they finally managed to fund it through a grant, and we finally managed to get it integrated into the network. And now you have the Ethereum crowd using this argument of the ultrasound money and all this. Do you see yourself Ethereum as money?
Like in terms of like everyone uses Ethereum on a daily basis, and or what do you mean like by Ethereum as money?
Yeah, because like if the argument is ultrasound money, then you're implying that Ethereum is money, right? And that's, let's say, one of the popular criticisms to Bitcoin, that it hasn't managed to be money or cash, that it has sort of like concentrated on the, it used to be digital gold. I think people are now starting to say digital real estate for whatever reason. They just changed the asset class. Then later on, it's gonna be like digital. I don't know what comes after real estate, but you get the point. So, do you see Ethereum becoming more money than, let's say, Bitcoin?
Well, it could be, but I more think that it could be the assets that are running on top of Ethereum, like the stable coins probably. And like if I think like what's the currency could be for people to use on a daily basis, that could be the kind of the stable coins that we have. Ethereum could stay just on this L1 layer that powers, like, secures the whole blockchain, and for kind of day-to-day uses we can use like stable coins for that.
Okay, sorry, did I cut you off by moving the microphone? No, I'm just thinking about that because for me it makes sense to think of Ethereum more as a commodity, right? Rather than money itself. Or I don't know. In general, the Ethereum crowd seems to be less worried about the monetary principles, whereas like the Bitcoin crowd cares more about these things. Which has the caveat of like the DeFi people, they're often just living the decentralized casino mindset, and you're just thinking about yield on top of yield on top of yield. So if you had to add more functionalities into StakeWise, yeah, which side would you go towards, or what are you looking to integrate in the future?
Yeah, well, we as a project actually started. So our next steps are to work on more decentralization of the infrastructure. That's something we are releasing in our next version, like V2, which we actually have a community call happening today, and then we will like talk more about the things we bring in V2. That's one thing. Make it more so engage more the community. Like we already see people in our community that are helping us on that journey, and we really want to kind of help them get even more engaged with the project and become like expand the DAO ecosystem that we have. It also comes to the integration, and this is something we are constantly working on, because in projects, it could make more sense, for example, to use the staked Ether assets, because they are mapped one-to-one with Ethereum. And the difference is that with staked Ethereum, while you're holding it, you earn the rewards. And with our like dual token structure, we allow people to kind of use their staked Ether token without actually needing to like simply by using any DeFi projects, and the rewards are accumulated in a different contract where they can always come and withdraw them from there. There is no like problems of the rebalancing token or yeah, so any other type of tokens that are hard to integrate with like DeFi projects out there. So yeah, integrations, more decentralization. There is always some space for improvement, even if you feel like you're getting there. There is always some more things you can decentralize. You can secure, like running the front end part on IPFS. Like you can always do more like technical part towards the decentralization. Integrating our token system with more like other projects out there. And yeah, and spreading the word about StakeWise, that's another thing as well.
That's very interesting. So what components do you feel are not completely decentralized right now, or would you like to be more decentralized on?
Right. So there's like several complexities as it comes to the infrastructure part. There is currently it's hard to delegate the running of the validator to like basically decentralized infrastructure in a way that anyone can run the validator for the project. The reason of that is because there are plenty of responsibilities. If your validator is down, you get penalties. If you run it incorrectly, you can get slashed, which means like you lose 2 free Ether, and your the rest of the amount is locked for next like 2 years or so. While we don't get to the phase when you can withdraw the validator, because now you can only deposit, but you can't withdraw the Ether from the validator. And yeah, so those two things are the main problems to solve. And the infrastructure part comes to kind of building the incentives to make sure that even if you delegate running the validators to other parties, you can there is no threat to the protocol in case they mess up with something, because running the infrastructure, it's still kind of a responsible thing to do for the project, because if you mess up, then it could affect other users that stake on top of that. So this is something we are currently working at, and yeah, so the infrastructure, I think, is the biggest problem in terms of decentralization as of like the ETH2 staking projects. And the rest of the things we are already in place. We have the DAO that is capable of doing like have the permissions to develop something on top of smart contracts. They can vote on any new proposals. Yeah, basically have it's the only entity that is allowed to make any changes to the project that is related to the smart contracts. That's an important thing, because even if like something happens to the core team when development stops, there is always possibility for the community to take that part over and develop on top or continue with the project.
Do you look at what other DAOs are doing when you're working on your own? I mean, and if so, which ones are you paying attention to?
I think in general, what I'm following the Gnosis DAO. I really like their structure, how they work, and the technological part behind the DAO. Also, like probably the Maker DAO, they have they were one of the first ones to like bring the concept and have their on-chain voting. So this is something I'm following as well. But the problem with like on-chain voting, for example, is that it's currently very expensive for people to express their opinion. And because it's like you have to pay the gas for every vote, and not many people are willing to do that, like because they kind of just vote but pay the gas for that. Yeah, I think those two are kind of the main ones I'm currently following. And in general, I think there is a really interesting, like as it comes to the Gnosis and what they're doing, they're bringing new tools in terms of the DAO, in terms of the off-chain voting, but on-chain execution of the transactions. And you can't execute on-chain without validating that the vote has went through. Like if you have, let's say, off-chain voting using the snapshot, people vote there, you have to make like the tools are to make sure that the vote went through to execute the transaction. So you can't execute that without verifying that part. So there is a lot of interesting concept there. Yeah.
I'm curious about off-chain voting because I haven't seen it, or I'm not up to speed in that front. How does off-chain voting work?
Right. So the off-chain voting usually works with IPFS. This is like the decentralized file system that you can use nowadays. So the way it works is basically you specify the proposal, like what you can do, what you want to change, for example, in the project, or like some new feature, and you upload that to the IPFS file. So that happens, everything happens through the interface, but that's like what happens on the background. You interact with that IPFS, and instead of people submitting their vote through the smart contract, they sign it with their private key off-chain and submit their signature. So we can always have like a list of signatures of people who voted for a specific like option of the vote, like yes or no, for example. And by checking their, like by having the signature and the address that voted off-chain, we can see how many like tokens, for example, that user had. And by summarizing the number of tokens, we can see like how many token holders voted for and against the proposal. So this is how
when looking at DAOs, I always get very interested because even in Telegram chats, right? So if I moderate the Telegram chat right now, and I sort of do with one, but not actively moderating, just like a community member, you see that there are often a bunch of, let's say, 5, 6 super loud people that you see there every day, and they seem to be paying attention to it every moment. And I assume it must be the same thing with a DAO, right? Some people just get extremely passionate. And in some ways, the things that you do have to be sort of geared towards those 5, 6 people, because then they sort of like set the environment for the rest. But at the same time, you have a very long tail of like the silent minority there that is who are voting and who are supporting your protocol or your project, and who are like raising you to the place that you want to be. So how do you find what social dynamics do you find interesting within the DAO model?
Yeah, I think like in general, what's the great about the DAO, if I think the successful DAO is the one that engages most of the users, the ones like who use the project on a daily basis, or not maybe on a daily basis, but in our case, for example, they stake Ether. They want to use all the features that we provide, like farming and like other things. And at the same time, they are interested in voting, like what should be the next, what they are mostly interested in. So there should be, I think, like there is a core team, and their responsibility is to engage those users as much as they can to the DAO to make the decisions. And there are different ways how you can do that. Like what we are trying to do, we try to measure the activity of the users and appreciate that with, let's say, our native token distribution, somehow like giving the roles, like if it's a Discord, like giving a roles to the people to kind of so they can so basically there is a scoring system as well, like how many messages you send, you have like levels up, and based on that, if you, for example, reach some level, you get like also, I don't know, airdrop or something, like you're an active DAO member. So in general, I think it's great when you see your votes, or you see the proposals actively voted. You can see yes or no answers, so there is not like constantly everyone voting for the same thing, but there is some diversity in terms of the votes, and also engaging on the forum when there is like some discussion around what's the best way to do that, or people bringing their points, like what matters to them. Out of that, we can build like the better feature on top of that. It's always like, if you have something in mind, you post that on the forum, and then you get like a bunch of comments about it. You can really see that thing from a different angle and build out of it like something better, like taking in account those comments as well. So I think that's important, and make the people, because all the DAO members, they are like coming from a different background. Some of them are more technical, want to contribute on a code side. Some of them are like in the marketing, who can like help to write some posts about the StakeWise, or they can like help engage more people into the project. And others are just like interested in helping out with whatever they feel like feels interesting to them. So it's just it's great if the DAO can manage to appreciate those activities and make people excited to help the project even more.
You would I'm thinking how to phrase this, but this is the year of the DAO. Well, it would have been the year of the DAO if it hadn't been the year of NFTs, right? But now it seems like everybody's going to the DAO model, and we had I did 2 episodes in a row with Joe Valenzuela, who's a Dash community member and a Dash evangelist, and of course, they were some of the first to pioneer the DAO, and Dash has its reserves that are controlled by a DAO as well. Somewhat successfully. I'm not too into the DAO model of Dash. I do follow Maker, for example, and Maker, I would agree with you that they were the first to like sort of nail the concept. But in those, when we were talking about the Dash DAO, in those episodes with Joel, we spoke a lot about Shapeshift and how they sort of took a proactive approach to DAO in their model, because they already sort of had the SEC knock on their door, and they were sort of afraid that that would happen again, and it would again slash their communities. And I would say that nowadays you sort of score the legitimacy of a project by how fast they move towards DAO, and or if they even have the intention, and that creates this other dynamic. It's all it's all coordination, like Kowoki would say. It's all coordination, and it's all these social games. because now you do have a lot of people that have no interest in decentralization, but they're wielding the DAO thing because it's sort of like what you're supposed to be doing, right? So it's like a marketing strategy. Oh yeah, we're eventually going to become a DAO. Um, what would you advise people to tell sort of like the fake DAOs from the real people that are really interested in decentralization? Or should we just give it credit
Yeah.
because they're they're mentioning DAO?
I think in general, thinking towards that direction is already great. Maybe like you shouldn't rush that thing to kind of, yeah, like from tomorrow we have a DAO, for example. I think it comes with more people liking the project and wanting to help in some way. And that actually forms the DAO at that sense. It's not like when you have already like on-chain, off-chain voting in place, you have like your token and you have that possibility. But there is not much sense in the DAO when you have like a small amount of like only, let's say, core members voting on the different features. That's something that you can actually, yeah, you can not spend like time on that or develop something more to the feature of the project. So I would suggest to just that like the DAO idea, or maybe just wait for that moment when you see that now it makes sense to, let's say, have a token voting, because there are more people who want to express their opinion, who are interested in helping out, and there are like more. It's not just within the core team. That you have to take into account the opinions of like the users of your project. So yeah, I think usually it's great to start as a more centralized entity, build the core product, build the feature and features like what you plan to kind of bring to the market. And when people start forming around that product, when people start to like it, like engage with the team, then it's good time to, I think, start like looking towards the DAO.
Mm-hmm. I would agree with that. I would say that if you go into a DAO, it's very simple to tell who's implementing things by the community and who isn't. And I would find it unfortunate that I don't see many of the biggest projects that are doing DAOs actually implementing things that are born in the community. In Uniswap, for example, I think we're yet to see one big thing come from the Uniswap DAO, is it?
Yeah.
And one thing that also very much interested me from StakeWise was the different strategies for staking and from earning rewards from staking. So would you like to speak a little bit about that?
Absolutely. So our core product allows people to stake their Ether. It's very simple. You just go to our stakewise.io and specify the amount of Ether you want to stake, and that's it. Like you don't need to basically do anything more if you just want to do ETH to staking. So
props on the design, by the way. I mean, the platform is very nicely designed. I didn't stake anything today because the fee was going to be like $100 and something. But whenever I do interview someone, I try and get a feeling of what their product looks like and how it's used and everything. And yours was pretty straightforward, man. I will give you props for that again.
Thank you. Thanks. Yeah, we really wanted to make it simple and just bring to the UI only the parts that are important to the user to see, like how many is staked, how much the user has earned, the APR, and like other things that we bring there. So yeah, as you stake, you earn rewards. You can compound them. For compounding, we have a feature. We have a Uniswap free pool. Liquidity pool where people can they can provide the liquidity and others can use the liquidity to, let's say, swap the rewards to the staked Ether and increase their principal. And by that earn even more rewards. So that comes to the staking. At the same time, we have farms. In the farms page, you can participate. Like as for today, we have two liquidity pools, one between Ether and staked Ether. That allows people to exit from staking before the withdrawals will be enabled. So that's another advantage actually of choosing the liquid staking product, because that allows you to quit staking whenever you want, even if you have like more than 32 Ether staked, because if you do that by yourself, you have to wait until ETH2 gonna support the withdrawals. That's gonna happen after the merge. There will be like a post cleanup, and in that time, then withdrawals will be enabled, and then you can withdraw your Ether. With us, you can do that anytime, whenever you want. You can just like swap your staked Ether tokens into the Ether, and you can take out your reward by swapping the reward token into the Ether as well. So that's why we use the liquidity pools to enable, and actually it's very good farming opportunity for the people to provide the liquidity for Ether and staked Ether, because it doesn't have the impermanent loss. The tokens are mapped one-to-one, and you instantly like provide liquidity between the same asset, but in a different form. There is no like price fluctuation between those two. So it makes sense to you to provide, because then you earn the fees from the people that the trade like buy the SF2 token or like sell SF2 token. That's the staked Ether token that we have. Or like you get the fees out of it. We also appreciate it with our native token called SWISE. And yeah, and you continue earning the rewards. That's another beauty. Like while you provide the liquidity, you still earn the I think it's 5.6% of APR from the Ether that you staked previously before that. Yeah, and there is another farm which is between SF2 and RF2 token. This is where you can already utilize your rewards and stake Ether in order to earn farming rewards as well. And that brings like the feature of compounding to the other users to swap between the reward and staked ETH token. And that's for now pretty much it. We are working on more integrations. We also have a vault created on Harvest Finance that does the auto compounding of the fees and the rewards that you earn. But at the same time, we are working on more integrations. We want to enable people to, let's say, provide to take a loan based on their staked ETH token. So what it will allow you to do is that you stake your Ether, you like lock your SF2 token. On top of that, you get more Ether, you're going to stake it again. And at the same time, you earn the rewards that you provided as a collateral to take the loan. So those kind of interesting DeFi mechanisms are one of the directions that we are currently working on. And yeah, that's, I think, as of the strategies, those are the main ones we currently have.
With I mean, one of the barriers, we were talking about your UX UI, and I would I live with a UX researcher, so there's a lot of UX talk happening in this house at all times, even
Right.
if one of us doesn't want to talk about it that much, but but you would yeah, shout out to the UX researcher. So we would always talk about this barrier, right? And the barrier is, does the user feel stupid using this? And with your product, it didn't happen to me. Like at all times, I felt like I understood what was going on. And you would say that I'm sort of like an advanced user in that I would immediately get the idea of the second token. And the more basic user wouldn't, right? They would need more information about that. But you would say that at the base layer of usage, or user expertise, you're covered, you're good. But then there's the layer of actually pressing the second button on the MetaMask, right? The approve button or the send button. Because we have to think about security concerns as users, and we have to think about DeFi security. And it's very interesting that nowadays we have these things that are like legit, because before we used to have this like non-legit versions of this, but now we have legit versions of here, have my money, multiply it. In some sense. So how do you think we can progress to a point where this is more normal for users, apart from the fact that, okay, people are not getting scammed, people are actually getting rewards, people are like not losing their money? But I think that's a significant barrier, isn't it?
Right. Yeah, I think it's we need to maybe educate more users to do a proper due diligence on the projects that they want to use. It's something that is probably difficult to do, but there are some things you can already see that when the project is like could be potentially a scam project. Like, for example, the team is not publicly visible. In some cases, it works, like SushiSwap, for example, but in other cases, it could be a signal that there could be a rug pull, let's say, at some point, or like other things. There are also the set of audits, like how well do you audit your smart contracts, because there are so many hacks out there, and I think people should, just like before hitting that send button, they need to like understand the risks of using the project, because there is always a risk involved in using any project. So and they should they should do like a proper due diligence on the project to understand that this is something they really want to use before rushing in, seeing high APR, like sending all their money there, and then just like expecting that everything should go well. It hopefully will go well, but there are some times that it happens to not work. Then.
And as for the risks of staking and just in general doing this on Ethereum,
right? So with staking, there are multiple risks involved as well. Like, for example, you have the infrastructure risk. Like there should be there were multiple cases already in ETH2 where projects were struggling to run the infrastructure properly, and that led to loss of the funds or so-called slashing events that happened as well. At the same time, there are differentiation between custodial and non-custodial projects. And with the StakeWise, we were happy to be the first project in ETH2 that migrated to the non-custodial system with smart contracts as a withdrawal destination address, because that feature was implemented by ETH2, like was included in ETH2, I think somewhere in like February or March this year, and we were able to migrate to that like April, May, and some other projects are doing that as well now, but like there was some time between when we were the only one to do that. So that allows us to not hold the withdrawal key, because there happened the cases where the project lost the withdrawal key and a lot of funds got lost because of that, because you don't have access to the validated funds if you lose the withdrawal key. That's like another risk that you should consider when staking in ETH2. If you lose the withdrawal key, there is no way you can get your funds out of the validator. They will be like forever locked in there. With the case of the StakeWise, as we have a smart contract instead of the withdrawal key that you need to hold like on a ledger or like write down somewhere, it's like always the funds are directed to the smart contract we eliminated that risk. There is a risk of the smart contracts, of course, always involved, but that you need to make sure with like tons of tests. You need to do proper audits from the good like auditing companies and make sure that you don't kind of lose focus on some of the part of the functionality. So the infrastructure, the withdrawal parts, the smart contracts, I think those are the main risks involved in ETH staking.
I mean, talking about custodial and non-custodial, there is always the idea that, sorry, not your keys, not your Bitcoin, or not your keys, not your coins, not etc. So there is that part of the reason why you'd rather go with a non-custodial solution as opposed to like staking your ETH on Binance or whatever centralized company gives you the option to stake. I'd be interested, though, in hearing your opinion on the risks for the system. If, let's say, a lot of people are validating or not validating, they're staking through Binance, for example. If Binance is holding most of the staking of the system, what are the risks for the system and for Ethereum itself?
Yeah, for the system, the risk is to lose the funds. That already happened once with like some other project. And what happened is that if, for example, Binance or any other custodial staking project will lose the withdrawal key due to some accident, like for example, developer accidentally for example, that what happened like some time ago, developer accidentally removed the withdrawal key because he thought it was the test environment, but it was the production environment, or it was not backed up properly. So the key got removed and there was no way to access the fund. So all the users that staked on that system, they won't be able to get their Ether back. So there's a way that like the company tries to get the could refund, but that's already like up to the company how they can how can they recover from that situation. But for the Ethereum in general, it could be also like maybe the main threat here is that if the withdrawal key will be lost or the project will get slashed, if there is a huge amount of validators that is under control of that system, it could affect the consensus mechanism of Ethereum. So we could see like, because there is a participation rate, for example, on ETH2, what it means is that how many validators are participating, like how many registered and active validators are properly voting, proposing the blocks. And we are good until we have like, I think it was 51%. So if we have or even a bit more, like 55, 56% of all the validators are voting properly, ETH2 lives and doesn't have any like problems. But it can recover from them, but it will take time to recover from them. So the way it's built, it can recover, but still it could take time. So that's the risk for Ethereum in case of that problem.
And well, since we're nearing the end of this chat, I would want to ask you, what would you say to the user that is not currently staking, that just has their Ethereum sitting there, yeah, unstaked, virgin?
Yeah, well, I would suggest to definitely check out StakeWise, whether that's the project that is interesting. If the user wants to stake Ether, so first thing for user to decide is whether he wants to stake Ether. So if that's the case, you have some Ether, you don't plan to like sell it in near terms, or you want to earn yield on top of that, you can like look for the like the staking option what you want. So if you
Okay,
want to do it
wait.
yourself,
Let's just make it a little bit more interesting. Don't make it for a random user that's sitting there. Do it for me because I have all my Ether sitting there on state. Because I just like having the stop loss in case something goes horrifically wrong. My stop loss is actually quite low. Like I'm willing to take a big cutoff. I'm just not willing to go like below a certain point. But yeah, for me that I have, please go ahead. Just personalize it.
right? Definitely. So the first question for you to answer then is whether you wanna. The first thing to think maybe is whether you have more than 32 ETH. If you have less than 32 ETH, then the only way for you to stake is to use ETH to like staking projects, pools that allow you to stake less than 32. Like in case of StakeWise, any amount you have of Ether, like starting from one way, you can stake that. If you have more than 32, then there are like one way you can go is that you can start your own node. You can do it yourself. You can start the validator, run it at your home, but then you have to deal with monitoring. You have to make sure it runs properly, and you have to be ready that you won't be able to use your Ether before it, like, I don't know, when the merge will happen and when like the withdrawals will be enabled. So you can't really get it out of staking. That gives you like some of the problems here, because if you go, for example, for a vacation, you have to still monitor it, because if it goes down, you will start losing your Ether. So if you don't want to run your node, there is like you have to use any of the solutions out there. So some of the projects don't allow liquid staking option. It's just like more as a validator as a service. So you start your validator node, it just runs there. This is something that StakeWise also has. We have like a solo staking feature for the people who don't want to get use of like DeFi, just want to like park their Ether like in staking and just like use our infrastructure to run the validator. That's available as well. However, if you want to like quit from staking whenever you want, you want to compound. Like if you want to compound, there is only one solution on the market, which is like StakeWise, because we are the only one that allows real compounding due to our dual token system. If you want to like participate in DeFi, that's also like possible. You can like use your staked Ether tokens for that. So in general, like I think it's like I would recommend to look through the projects, do like a due diligence on all of them, like see the team, how the project works, the plans, and the general, the community, how people react. It's always good to go to the Discord and like ask the questions like, hey, I'm new here. How is it this project for staking? And most of these users, they usually can like answer that. So yeah, but in general, I think in our case, we provide quite many features that are really built on top of ETH2. You can do like much more than just staking, and you can be as a base user who wants just to stake and compound the rewards. That doesn't involve any tokens. You don't need to know anything rather than how to use, let's say, MetaMask and how to transfer Ether into like stake, but you don't need to even engage with any tokens you have. You can just like, it happens everything happens like on the background instead of you kind of interacting with that. Or you can go like DeFi way, you can provide the liquidity, you can like deposit into the vault, and like more things that we will build on top of that. So we see actually a lot of users to see like StakeWise as a good entrance to the DeFi or to like Ethereum in general, because they start from buying Ether and then they're thinking like, okay, what can I do with it next? And then they read about staking, and like our solution is one of that like they can usually look at and see if that works. They can stake Ether there.
That's great.
So
And well, since we're already plugging StakeWise, well, where can people find more about this? Where can they get in touch?
sure. You can just go to stakewise.io. There are links to the Discord, Telegram. We are always happy to answer any questions. We are always active on both of our channels. Feel free to like ask anything you care about. We will happy to answer. And yeah, like everything from there, you can just click start staking. I like if UI is fully understandable, you can just like provide the amount of Ether you want to stake, and that's pretty much it. It's pretty easy to get onboarded.
And this is a question I want to start asking more. I always forget, but I want to start asking more to people. Who do you follow that you think more people should follow in the space? Which resources are you looking into that more people that you think you would like to drive attention towards?
That's a good question, because I'm usually following like the tech part, the updates like on different projects of like I'm following some like developers of Uniswap. I'm following some developers of Yearn. Like those are who are developing like a lot of things in DeFi to kind of get to see what happens in other projects and how that could be, for example, in any case, utilized in StakeWise as well. So I'm not like a huge Twitter user. I'm more like following the ETH research, ETH2 specs, what's coming next in ETH2, and the developer side of that as well. Like joining the Discord, I think is one of the great things. Like you find the project you like, you join the Discord, and there you can just like engage with the community, understand it more, ask questions, and if the like not the DAO maybe, but the like the community there is active, they will easily like onboard you and help you to learn something new and to yeah, understand the project more.
All right, cool, man. Well, if there's anything else, I think we covered quite a lot. But if there's anything else you'd like to tell the people before we leave, this is your moment.
Right. I think like would be great for people to look at our V2. We will have a community call actually in like 40 minutes. So
okay, this is 2 weeks in the this is 2 weeks in the future. So good luck with that.
Yeah. All right. So, but we will definitely we will release a blog post around StakeWise V2. It will happen. There will be a lot of things that any ETH2 potential staker or ready staker could really benefit from, and a lot of focus on the DAO, on the engaging the community, participating in staking, more options in DeFi, so decentralizing the infrastructure. All those things will be available through the Medium posts, and we will share them on our Discord channel. So I hope people can join our Telegram and Discord to follow us and stake Ether with us as well.
Cool. I'll definitely be looking into staking some of my ETH because I do feel like that's also something that you do to support Ethereum as a whole, right? The more people support Ethereum, the more scarce it gets, the more you keep your hands away from day trading, which is always something good to do. And well, thank you very much. Thank you very much, Dmitri. That's a pleasure.
Thanks, Carlos. Yeah, it's a pleasure as well. Yeah. And if you happen to have any like I don't know, questions or like about staking or whatever, always, I think we have now in Telegram like linked in the Telegram, so you can always like hit me back. Yeah.
Cool. And well, I'll look forward to having you back in some time to check on your progress, man.
Definitely, we'll be happy to share it. Yeah.
Cool.
Cheers.
Well, thank you very much to everyone listening home, and we'll see you next one.